we're talking about not necessarily a tech theme today, but it obviously affects a couple of tech companies, which we'll be talking about. But we're talking about stock splits. So, Dylan, for our listeners that may not know, what is a stock split?
Stock split is basically, if you think about a company's value and their ownership as a pie, stock splits are taking that pie and maybe it's cut into eighths, we'll say, to start, and then cutting it into sixteenths.
What kind of pie is it?
I like to think it's a pecan pie.
Pecan pie.
Pecan pie. So if you owned an eighth of that pie and it was a 2-for-1 split, you would be getting now 2 slices of 16ths pie, right?
Why do people do this, Dylan? No.
Yeah, I mean, there are a couple different reasons companies do it. Some of them I put credence in, some of them I don't personally. But the idea here is like you're making your shares slightly more accessible to the average investor. So because the overall value of the company doesn't change and you're just getting smaller slices. So say you're currently trading at $100 a share. They do a 2-for-1 split. They are now trading at $50 a share, right? And you have 2 shares in your account.
What is your opinion on that? Because obviously, and everybody's favorite example of this is, of course, Warren Buffett's Berkshire Hathaway. Not everybody has a $200,000 to just buy 1 share of something. Do you think that matters?
I think there's something to be said for keeping your share prices high and having people that are buying and holding and not moving in and out of positions. Right. I think it does attract a certain type of investor. I do think it's nice when companies decide that they want to make their shares more accessible to the average investor. You know, Tim Cook, when Apple split 7-for-1, said, we're taking this action to make Apple stock more accessible to a larger number of investors. Like, made it plain and simple. Like, this is part of the motivation for this. One of the other things people will cite is it does increase liquidity. If for whatever reason you're seeing really wide bid-ask spreads, so what people are willing to sell for versus what people are willing to buy for, and the brokerage accounts or the brokerage teams that pair those up, you'll see those spreads tighten up.
That seems like kind of a dubious claim in this, in today, because of just the proliferation of technology in the financial industry.
Yeah.
All trading is done by algorithm now anyway. So
especially because most companies that are splitting, for the most part, already have a pretty big, daily active volume, and it's not something that's going to dramatically change that. So I don't know how much I believe that, but the last line of thinking, and again, this is one that is not super relevant maybe as much anymore, but board lot thinking and the strategy there. So a board lot is the standardized number of shares as defined by a stock exchange as like a trading unit. And so basically you think about some of these big institutional moves and brokerage moves that happen. The purpose of these board lots is to avoid odd amounts of shares. So if everyone is working in these 100-share denominations, typically, then you won't wind up with these weird 83-share lots that no one wants.
Right.
And so it makes it easier to get a collection of 100 shares for that board lot if the share price is lower.